Good evening from Beijing. I'm Kate Kui from CGTN Global Business. Well, concerns are mounting over the viability of the US dollar as a world reserve currency. Well, the US dollar has long been the world reserve currency. However, a new world order appears to be emerging from somewhere else. Well, the moves come as the American banking and financial system dangerously became problematic again. Well, several high-profile banks have seen trouble this year, and we're only in Q1 of 2023. We've just gone through COVID, and the regional conflict between Russia and Ukraine is still going on. Where are we now, and what shall we expect for the rest of 2023? Today, we have Gao Bing, CEO of Kaifeng Investment Hong Kong, and he will share with us his views on the greenback and the world economy looking ahead. So, Gao Bing, good to see you again.
Same here. Thanks for having me.
You know, currency exchange rates reflects the relative economic power of two sides. From your perspective, the recent trends, as what we're seeing, more countries and more economic entities are choosing local currency or RMB as main settlement currency. Does that mean that greenback or United States is losing its economic power or its status?
I think the answer is yes, it's a gradual process. It actually fits in what we probably discussed last time about this, what do we call the DM, developed market to emerging market rebalance or conversion. In the sense that if you look at the global economic picture, the output, the share of the output by exchange rate basis, the DM still dominates. But if you look at the IMF's PPP-based measure, China has overtaken the US as the biggest economy in the world back in 2016. Now it's 120% of that of the US. The other less well-known fact is that the BRICS countries, the total size of the output of BRICS countries measured by PPP actually overtook the G7 in 2019.
Right.
That basically means that with the growth of the EM countries and with especially what happened over the last couple of years. And I think the voice of the emerging market is getting stronger and it's chipping away of the importance of the US in the world power, world politics.
Right. So basically what you're saying is that putting all these pictures together, that other currencies, including RMB, is gradually taking certain position of United States as a world dominant reserve currency. But in terms of replacement, can any currency challenge US dollar greenback at this moment for now?
I don't think that the RMB will replace the US dollar. I think there's two questions. If you look at the world now, the dollar is the prominent reserve currency in the following sense. Number one, it has the biggest share of the world reserve management. It is even after the fall over the last 2 decades, it still accounts for about 60%. Right now, the most recent number was 58 some percent. By December last year.
Right.
So that's biggest. And the euro is something like 30%, and then the others are relatively small. And by the trade settlement, the US dollar is the predominant currency. It accounts for nearly 90% or maybe even more in a lot of cases. Right. So, but this is changing. Right? And I think that the initial process is always very small, very little, right? But bit by bit, and what we saw over the last month is really, I think that what was the news report, and we saw last month, whether it's Brazil, China, whether it's China, Saudi Arabia, whether it's Malaysia, India, it basically go into the same direction. And the more countries are worried about using US dollar alone as the only currency, you don't know when, at some point, you may make the U.S. unhappy and you become the target of a sanction. That's one important point. And the other point I want to make is that if you think about the world, if you think about any healthy system, right, having just one thing control the system, which fully controls the whole system, is very risky. Right? It's efficient, right? But it's risky. If you look at a human body, we have two eyes, we have two kidneys, we have two arms, right? So we need a backup system. Right? So in the global world financial system, after the Second World War, and because other countries that were so in such a terrible shape, and that's why we had the U.S. dollars, the world reserve currency. Now things have changed, as I mentioned earlier, that the power of other countries, the economic pie is more equally shared among many countries in the world. So we probably need more currencies just to make the system safer. I don't mean that it has to be the RMB. Actually, last year, when after the start of the Russia-Ukraine conflict, or if you want to call it war, basically that signals which party you are in. After that, I basically was arguing that the world is moving from a unipolar currency to a multi-currency system. Right. And the possible choices of other countries, the viable currencies, which may become a competitor of the US dollar, actually is not euro, not Japanese yen. The reason is simple, because they are the same currency block. They all sanction other countries in the unison, right? So the viable currencies has to be outside of the NATO system or the US, European, Japan alliance. Right? So the viable choices are, of course, number one is RMB. Number two, I think it would be India rupee. Right. And then you have basically the BRICS country currencies, but South Africa not in very good shape, and then the Brazil, always goes up and down, and the Russia right now definitely is not a good choice. And so beyond those, I think the Indonesia rupiah and the Saudi Arabia in the Middle East, the big force, right? So I think all these currencies may become the major alternatives. And of course, among those, RMB is the 800-pound gorilla in the room.
Right. Our economic entity in terms of size and volume is also much bigger within all those currencies you just mentioned. So to summarize what you just mentioned, basically you're saying that U.S. dominance as a reserve currency will probably be no longer existing in the near future for what is happening in both the geopolitical side and also the economic dynamics among different economic entities. This is one. And secondly, we will see multi-currency, a lot of regional currency emerging in international trade settlement. So before we go to whether US dollar, the dominance will be challenged or not, let me ask you this. Will it bring more efficiency to the system if we indeed have multi-currency settlement system versus the previous US dollar dominated trade settlement system? Assuming the war will be over and assuming all those geopolitical tension will get going.
The answer is obvious no. Because if you have one currency, you have efficiency. Basically, you have the economy of scale, right? Right. If you have the economy of scale and the US dollar is smooth running, a system has been there for how long? For like 80 years, right? Like 70 years at least. So if you go from a well-smoothed machine to multi-machines, and the initial stage will be just adding more friction to the system, right? There'll be less efficiency of scale, and people need to work to create a system. And here again, I think China, the RMB leads all the other currency alternatives. And I'm sure that China has been working on the global payment system.
Right.
It's called the CIPS, right? The CIPS payment system. Now the system actually has more than 1,300 participants.
Right.
And directly covers over 100 countries, and indirectly covers 175 countries. Like China only had diplomatic relationship with 182 countries, right? So it covers pretty much every country China has a diplomatic relationship with, right? But this took a long time for China to build. If other countries want to build a similar system, and it will cost them money as well. And all those money need to be paid back at some point in the future. And so they make system less efficient. However, just as the US thinks the manufacturing supply chain concentrating in China is not safe, and the other countries will think the same way that financial system concentrating in the hand of the US is not safe either. So we are looking at a world where the US trying to take the supply chain away from China, and other countries are trying to take the financial supply chain away from the US. And to become less efficient, and that will mean that the inflation will not be coming down very quickly, as many people expect.
Right. So basically, you're saying the mounting power from China will bring the balance to this monetary system between the East and the West. Apart from that, how would you comment on the Bretton Woods system? Because apparently that system itself is also not working, apart from the split between East and West, apart from the mounting power between the United States and China, mounting power from China.
Okay, so the Bretton Woods system is interesting. It goes back a long time.
Right.
But what I want to point out first, is that within China, if you talk to many people, right, and when you talk about when you comment about the United States, and many people's belief is that the United States is really trustworthy, and the credit system, they never defaulted on anything.
Yeah.
And that's not true, right? They did not default on their treasuries, but they did default on their promise of the Bretton Woods. Right? The Bretton Woods promised that the U.S. would exchange $35 for 1 ounce of gold, right? And they broke that promise in 1971. And they fully floated the currency in 1973.
Right.
And that's a broken promise, right? That's a default on their contractual obligation, right? And so that system has failed in 1973. And however, the U.S. managed to attach the value of U.S. dollar to the most important commodity of the world, the crude oil.
Right, crude oil, yeah.
Yeah, and now even this system is breaking down. Right? So many more countries, are saying that, especially the crude oil producing countries, they are saying they may want to settle the oil trade in other currencies as well, right? So we are looking at the breakdown of the Bretton Woods 2. If you think the Bretton Woods 2 is the U.S. dollar pegging somewhat pegging to the crude oil.
Right. So my follow-up question will naturally be, what do you think the Bretton Woods 3 will be?
The Bretton Woods 3, I don't think that there will be immediately Bretton Woods 3. And so there are a lot of people who are calling for petro RMB, and I haven't seen anyone call for petro rupee or petro ruble or those things.
Oil
I think
money,
that,
basically,
yeah. Basically, people think the oil money. I think that belief is misplaced, right? If we are going to a world of multi-currencies, and we don't need a Bretton Woods. Right? Bretton Woods is basically one currency dominates,
right.
And one currency, you have to maintain the stable value of that currency, and by pegging it to some really, really important commodities, right? And we definitely will see there will be some more crude oil settlement in RMB. But I don't think RMB, the value of RMB is linked to the crude oil, because after all, China is not a crude oil producing country. Right. And I was thinking 2 years ago about whether electricity will become the back, will create the value RMB is going to be based on. Right. After all, China actually produces twice the amount of electricity every year as that of the US. Right? But I don't think that would be a reality either, in the sense that electricity is difficult to transport over long distance. Within China, the transportation of electricity is the transmission of electricity is very efficient. Right. But if you transmit it across border, especially you send it to Africa, that'd be really prohibitively costly, right? And so I do think there's a strong support for RMB. And that's why I have been bullish on RMB for a very long time, actually, since 2016. And right. Even 2015, after RMB depreciation, many people were pessimistic. And I was optimistic. I said, the actual value of RMB is the China's manufacturing. Right? And China manufacturing value added is about 30% of the world, and that amounts to all the manufacturing value added of the G7 countries. Right? That means if you have RMB, you can actually buy the product China makes. Right? So if the trade becomes settled in RMB and you use RMB to buy China trade, to buy China-made products, your purchasing power is going to be much more stable right. than if you had US dollar, right?
So basically, yes, the manufacturing is basically our confidence, so to speak. When we talk about the sort of reserve currency and talk about its responsibility and also the feasibility, one thing will definitely be mentioned, which is the capital account convertibility of RMB. When do you think this will happen? And what are the restrictions now? Why we are still not fully making it fully convertible?
Yeah, it's definitely slower than I was expecting.
Right.
Back in 2016, 2015, back in 2016, I wrote a piece basically saying that people are underestimating the decision China was making in 2015 by floating the RMB. Okay? And I think I thought at that time, in 10 years' time, the impact would become well known and the RMB would become a floating, well, it is floating now, actually, the managed float already. But I thought at that time that in 10 years' time, the capital account would be totally open. And China needed an up and down cycle in the US, right? So, they need to go through a depreciation and the appreciation process to get domestic companies to used to the fluctuation of the RMB. I think that is ready now, in the sense that the domestic companies now are fully accustomed to RMB exchange rate floating on daily basis. However, I think it takes longer for the capital account full convertibility because I don't think the administration or the regulators have this confidence. Right? So when I ever go to Beijing and talk to people there, they always get frightened if there's if the FX reserves drops to $3 trillion or something like that, get close to $3 trillion. If you talk to the financial practitioners, you talk to the bankers, you talk to the people working in security dealers, you talk to people working in company doing export import. Their default thinking is that China need $3 trillion FX reserve, right? The answer is actually no, right? If you look at the big economies, no big economy really need a large FX reserve, right? So if you let the currency flow, and China has a big manufacturing base, right? So RMB value will be maintained by that manufacturing value added. Right? So the currency can float, but over the long term, it's going to appreciate. And even if you don't have that FX reserve. So currently, because the current FX reserve is around $3 trillion, and I think regulators don't have that confidence, it takes a little longer. And there's also some rethinking in the world whether a full convertible capital account is good or not.
Right. Yeah, I think there are a lot of discussions that we can keep going on the pros and cons of a fully convertibility of a capital account. But I think the fact that RMB hasn't really been fully converted at this moment, become fully convertible at this moment, must have a lot of considerations from policy side as well. Let me ask you this, Professor Gao. U.S. government, while they issuing U.S. Treasury bond, they are the issuer. Previously, a lot of foreign governments are the largest are the largest holders of the Treasury bond that they issued. But now, apparently, U.S. government is the largest bondholder of U.S. Treasury. What does it mean?
To clarify this point a little bit. It's not the U.S. government; it's the U.S. The Federal Reserve.
Yeah, Federal Reserve.
Right? Yeah. The Federal Reserve is the largest holder of the U.S. Treasuries because the QE. Right? They have done the QE for a long time, right? For however we can remember. For the traders on Wall Street, that's the only thing they can remember, right? So, I mean, here's the again. I really worry about whether the current curve inversion will sustain in the second half of the year. Let me tell you why. Number one, China is not buying more. China is buying less. China is actually selling, right? If you look at the take data. Right? And given the relationship currently, it doesn't look any improvement. We don't see any improvement in there. So I suspect China will not be buying. That's one. Saudi Arabia is not buying. And that leaves Japan, which is the buying. But the second half of the year, I think it's really dangerous for the U.S. Treasury in the long-term treasuries. Because the second half of the year, Japan may get out of the YCC.
Right.
Okay? If Japan gets out of the YCC, the Japanese 10-year will likely go to 1%, 80 basis point to 1%.
Yeah.
And that yield will be very attractive for Japanese domestic institutions. So they are very likely to sell all their treasuries, not all, but they are very likely to sell their U.S. Treasury holdings and come back to Japan and buy their own bond at about 1% and in their own currency. And the second half, that's from demand side. So I think the second half of the year, there's a little demand for the U.S. Treasury. There are much fewer demands for U.S. Treasury. On the supply side, the reason the U.S. Treasury yield right now, the 10-year yield is still low, is because no issuance. Right? The U.S. has hit the debt ceilings. Right? So they couldn't issue Treasury to the market. Right? So there's no supply. I think that in the end, the Biden administration, Democrats will work with the Republicans to get the debt ceilings passed, or at least to suspend the debt ceiling for 6 months or something like that.
Right.
And that will allow the U.S. Treasury to reissue the treasuries to the market. So all of a sudden, in the second half of the year, especially I think after the September 30th, and that's the fiscal year, they have to extend debt ceilings.
Right.
And so we are looking at a huge imbalance between demand and supply. Right? So that's when I think the U.S. Treasury yield will rise sharply.
Right. So you think the yield will rise sharply. How would that actually affect the currency exchange rate between US
The
dollar and
currency
other
exchange
major
rate,
currencies?
yeah, I mean, that's, it's interesting that in the second half of the year, what happens is that currently, I think that the Federal Reserve may hike one more times, assuming that we don't run into another financial crisis very
Right.
soon. So I think the Federal Reserve will hike another 25 basis point, and we'll be done with it. Right? And so the front end yield will be here a little bit over 5%. And the back end yield right now is very low, right? It's way below 4%.
Right.
Right? So in the second half of the year, what you see is that the back end of the yield will rise and the front end yield will stay relatively stable because there'll be no hike anymore. Right? So the interest, if you look at what affects the US dollar, it's actually front end rate. Right? So the front end rate is more important. So if we see the front end rate becoming stable, and then I do think US dollar relatively is going to depreciate rather than appreciate after the Fed is done with the hiking.
Right. So you think if Fed doesn't pivot, instead that they raise interest rate again in the second half, then the greenback will actually depreciate a little bit in your view. But most people are actually thinking that Fed pivoted already because U.S. market doesn't really see too much overheating, and in the meantime, there are high chance for U.S. economy going into recession. But your view is totally on the other side. So you're
it's not totally on the other side.
Right.
I think the U.S. will enter recession. Actually, for that question, I do think the U.S. will enter a recession. However, okay, this is like splitting hairs, right?
Right.
I think the U.S. will be in mild stagflation by the end of the year, right? That means basically what I mean is that the U.S. inflation will be sticky, and even by the end of the year, many people expect it to drop below 4%. I'm not that optimistic.
Right.
I think the inflation will be still much above 4%. That will stop the Fed from cutting rate. So I don't think the U.S. will cut, right? But the recession is mild enough for the Fed not to really cut. Right? If we do enter a more like global financial crisis like 2008, and then in that case, the Fed will definitely cut rates, right? So we will be, I'm thinking a scenario where we will be worse off than year 2000. Right?
Worse off than year 2000. 2000 was pretty bad.
No. Okay, that's the interesting thing, right? If you look at year 2000, well, we'll be somewhere between year 2000 and year 2008, right? We'll be worse off than year 2000. You think it's bad because stock dropped tremendously, right?
Right.
The Nasdaq dropped 80% and the S&P dropped 50%.
Yeah.
Right? That's actually the comment I want to make. I want to run a parallel between now and year 2000. But if you look at economic growth, right? There are only there's actually no exposed, there's actually no recession. Right? There's two disjoint quarters where the annualized GDP dropped by more than 1%, about 1.5%. Right? It's in the first and the third quarter of 2001. Right? By the whatever what's that organization defining the recession. There's no recession because you needed two consecutive 2 quarters to define a negative growth,
right,
to define a recession. But the stock dropped, the S&P dropped 50%. That's really severe. But then if you look at when the stock started dropping, the Fed ended the hike in May year 2000. And the stock only started dropping in September 2000.
Right.
And once start dropping, the Fed rate cut doesn't help. Right? The economy just stalls and it drops a lot. And the real reason for the stock drop that much It's because the year 2000 bubble was too big.
Right.
The 90s bubble was so big, and the investor got so used to buy on dips. So when it finally collapsed, nothing is going to stop it. I think this is very similar. We have had a 13-year bull market, if you count from 2009. Right? The investors, again, are very used to buy on dips. And so when it finally drops, I think this round is also going to be one very severe.
Right.
I think I just saw a letter from GMO. They're talking about the same thing. They're talking about Graham talking about the S&P. When it drops, it can drop like 50%.
Okay.
I think the market is too bullish right now.
Okay, we'll wait and see how Fed react in the second half of the year, whether they will raise interest rate or not. On the other side of the globe, apparently you're very optimistic about economic growth in China, as always. So can you share with us your view on how you think China economy will go in the second half of 2023 while we're recovering from COVID?
Well, first, let me make one more comment on the Fed cut, right? Powell is harder to predict than the previous Fed. The reason being, you can call it harder or easier. I want to highlight one thing. Powell is a lawyer, right?
Right, okay.
The previous central bankers were all economists. Economists believes their models, right? Lawyers doesn't, right? Lawyer doesn't, right? The lawyer believes, looks at a fact, right? So if the inflation comes down really fast, then he will cut. But if inflation remains sticky, he's not going to cut. So that's one comment I want to make, right? So I want to highlight the difference.
Right, but we also have to, based on the economic projections, you can't really just make your policy based on the facts happening status quo. You have to look one step further. Otherwise, probably not policy.
That's really the interesting thing. I think the other economists, central bankers, they do that. I don't think, the current Fed definitely try to forecast, but I think Powell emphasized more on the facts he sees.
Right. Okay.
Right.
Okay.
Yeah.
Great.
So currently,
yeah.
Currently, you have the employment is still strong, inflation not coming down, so he's not going to cut.
Right.
But if these two numbers weaken significantly, he's going to cut. Right. So that makes him harder to predict in a sense.
Right. Let's shift to China. Share with us your view on the economic growth prospect of China in the second half of 2023.
Well, I want to correct one thing. You said it's optimistic about China growth. I'm not, right? So I'm optimist. I'm very optimistic about the China's long-term growth prospect, because I believe China has found a better balance between market and the government, much better than the former Soviet Union and much better than the US, right? So that's why I'm more optimistic in the long term. It does not mean I'm very I'm optimistic all the time. Actually, last April I was quite pessimistic because I thought they were making mistakes in terms of the quarantine measures. But anyway, that's the past, right? For the second half of the year and for the whole year, basically, I think the 5% is is a no-brainer.
Right.
The real estate has recovered faster than I originally expected, because originally I was thinking real estate investment would still be negative year on year for this year. Now it looks we're going to see a positive number. And if you look at the property sales, they have gone up quite quickly, right?
Right.
So given that, I think that we are looking at a 5.5% to 6% growth for the whole year. That's what I'm looking at.
Right. So what are the potential risks or roadblocks to stop this kind of growth momentum or slow down this growth momentum, as you just mentioned?
Okay, so there is one risk, but not global. Many people worry about Taiwan Strait and South China Sea. I think that's risk we cannot predict, right? And if there's a war sometimes is good for the economy. Right? We don't want a war, but there's a war. The manufacturing accelerates. But anyway, I'm looking at a local issue in the LGFV financing. Right? And because of last year, because of the quarantine restrictions and because of the local government spending on all this, on all this, sorry, on all this, the COVID-related expenses, and the local government, the financial situation is weak, right? So this year, we do see a lot of local government trying to get financing, and they are very friendly to financial institutions who can help them to sell bonds to the market.
Right. Okay. Yeah.
And so there's a shortage of money in the local government, right? So that's a real risk. I think that for the whole country, there's not an issue, because if you look at the overall leverage of China, it's about the same level of that of the US, right? Much lower than Japan, right? And if you look at central government balance sheet, it's still also the same as that of the US. And and China central government has assets as well, unlike other countries. However, I think there's some sense of complacency in the central government, and they are still forcing the local government to deleverage, where the local government does not have the money. And so if something happens, let's say there's a medium-sized province, all of a sudden they couldn't sell their bond to the market, then we may have a credit event that can spread. And the other thing makes me less confident is the real estate. And it's not, the property sector is recovering. And so the property sector itself is not a big risk. However, the thing is that if you look at the US, the 2008, from Bear Stearns to Lehman, it's basically only 6 months, right? Even go back to the SSBC debacle in 2007, that's like 18 months, right? The US managed to resolve that issue. The government, the central government, made decisive decisions to save the economy. That took no more than 18 months. Well, we would think that the Chinese central government would be more efficient or more decisive in terms of resolving this issue. But the property sector has been there. The problem is the property sector has been there for more than 2 years. And we still don't know which company is going to live and which company is going to die, right? So if this happens at the provincial level, that may create a very big headache. And that's a risk, I think.
So basically you're saying that there are a lot of hidden liabilities that we haven't really discovered, but might become a very big issue for us going forward.
I don't think it's a hidden liability issue. I mean, the central government has a proper account of those hidden, so-called hidden liability.
Unrealized costs, so to speak.
Yeah, it's actually a misplaced category.
Right.
If you look at local LGFVs, right, a lot of their liability should belong to the government, but it's counted toward the corporate debt. So that's why the China's corporate debt to GDP is the highest in the world, at 160%, where other countries typically less than 100%. I think, the 60% of that actually belongs to the government. So if we properly categorize those debts, the overall government debt should be higher, and the overall corporate debt should be lower. Right? Right. So just because it's it's not properly counted, and that probably gave the central government a false sense of everything's fine. And I think that it is the cash flow issue. If at some point a provincial, medium-sized province stops paying the debt,
right,
then that becomes the issue. Even at not province level, just even if it's a big, a systematically important LGFV in that province, which cannot pay the debt, that can be a big credit event.
So basically, you're saying that if the cash flow issue really comes out, and then if they cannot replace their existing loans by issuing new bonds, then the problem will really emerge, and that could cause certain chain effects. Right.
That's right.
Okay. My final question to you, but also very important one to you, is: do you think U.S. dollar will further depreciate this year against China, against Chinese RMB, or the other way around?
We traded this thing day in and day out. For the end of years, I think the answer is yes.
Right.
Because the Fed will be done by the middle of the year, and my overall economic outlook for China is strong. And I think ultimately, we have a framework called the RMB. The first thing which determines, we talked about a lot of RMB, the B of the RMB, in terms of belief, right? So the market used to believe in China, in the US. Now the belief is shifting partially toward China. That makes China overall asset more attractive. The second one is money, right? And I think the money flow, the RMB is still a small fraction of the global FX reserves. It accounts less than 3%. Well, the RMB's weight in the SDR is 13%.
Yeah.
Right. So that can attract a lot of value in this rebalancing. The first one is return, right, or rates. The China rates is lower than that of US, so the bad for RMB. On the other hand, the expectation is that we do think that China's equity will do well. I think a lot of investors think that too. If for the second half of the year, the economy really prove it is growing in a healthy speed, the equity will go up and attract more currency in. So toward the end of the year, I think the RMB will appreciate.
Right.
But I want to put a qualification in there. Toward the summer, there's some uncertainty because seasonality-wise, there are a lot of demand for FX in June, July, and there are two major issues. One is that China issued a lot of offshore shares, the H shares, the state companies, SOEs, and they pay large dividend. Like the banks, right? They pay really high dividend. They need to buy Hong Kong dollars, right? That add pressure to the RMB. And the other thing is that after Hong Kong open, if you look at the daily visitors, it has increased tremendously. It's vertically up. Right? And so these people who come to Hong Kong, and more people go to Japan, go to Europe, may even go to US if there are more flights, and they need to buy foreign currencies. And the summer is a big international travel time. So there'll be more people buying dollar and sell RMB, and so there's some short-term pressure. And so next 3 months, I think will be more fluctuating. Maybe RMB may even depreciate a little bit. But the second half of the year, I'm more bullish.
Right. Okay. So going into summer, there are a lot of uncertainties, but towards the end of the year, the situation looks rosy. Great. Thank you so much, Gaobing, for your time today, as always. We just spoke with Gaobing, who is the CEO of Kaifeng Investments Hong Kong, and he shared with us his views on global currency regime and also the U.S. currency, whether it's going to be whether its hegemonic power as a global reserve currency will be challenged, and how other global currencies are looking like in this uncertain economic dynamic world. So this is all for today. Thank you so much. Until next time. Bye for now.